Well, powering ahead tonight on the program, we focus on KenGen's plan to turn Kenya into a geothermal hub of the world. Good evening. This is the Trading Bell. Later on, I'll be talking to Samuel Gishohi. He's the business development manager at NIC Securities, and of course, we'll be focusing on how the market has performed in the last 1 week. But for now, we have a one-on-one with engineer Albert Mugo, managing director, Kenya Energy Generating Company. All right. Thank you very much indeed for joining us, engineer.
Thank you.
Very good. So, I mean, we are going through a very tough phase of a debilitating drought, and we have heard it from the government that this is likely to edge up the cost of electricity, bearing in mind that our dams, the water levels have gone quite low. What is your reaction to that?
Well, O'Brien, the water levels is a reality because everyone knows that it's been dry. We've been going through drought. And we are happy that despite the low water levels, we have other sources of electricity that will ensure that there's no power rationing. So currently we have geothermal, which is providing the biggest part of our generation. As a matter of fact, it's at about 47–48%. And then, of course, we have the hydros, which are able to supplement that. And then there are also the diesel plant that are able to give the balance to the tune of about 13–14%. Yes.
I mean, as a country, should we be talking about, raising the cost of energy in a country where we have a surplus?
It's not really raising the cost of energy, because I think it's fair to appreciate that the environmental conditions that come about outside the control of the players do affect the way business is done. For example, when the rains are very good, we generate a lot from the hydros. And in fact, the fuel cost charge that you find on the electricity bill comes very low. On the other hand, like now when the drought is biting us and you have to raise a little more generation from the diesel, you might see some increase in the thermals. And I think that's what the Cabinet Secretary explained some 2 weeks ago when we visited the dams, that that fuel charge could go up a bit to ensure that there's no rationing, but that everybody is getting electricity. Yes.
And we know for sure that if we raise the fuel charge, it is going to have an impact on the total cost of electricity in this country. Still, while at it, we know for sure as a country we have immense potential of geothermal, we have immense potential of solar, of wind in this country. How comes, we still rely so heavily on hydropower?
Okay, first of all, the fact is that hydropower currently is the cheapest source of energy in Kenya. So we must appreciate that it's what has made us to be where we are in terms of the cost. They were the earliest mode of generation that was developed in this nation after independence. And at one point in Kenya, hydro supplied 80% of the power that is consumed. But over time, because of exactly what you've raised, over reliance on hydro, we've been able to add some other sources of generation, such as geothermal, so that now geothermal dominates at the 47–48% that I've mentioned. So yes, there's been tremendous efforts in moving us away from being completely dependent on hydro. But as I said before, remember, hydro is very, very good and cheap. And because the rains do come, only that occasionally we have some drought. But most of the times there's no drought.
But of course, we can't run away from the fact that hydro is one of the most unreliable form of energy, because it's very hard to predict when we are likely to have drought and when we are likely to have an overflow.
Okay, fine. So you mentioned solar, you mentioned wind. Hydro, by the way, is not as unreliable as solar.
It's one of the most unreliable.
It's not as unreliable as wind, because as you know, wind will blow one time and it's not there. Solar is there, but immediately there is a little cloud, you could see your meters coming down to zero. So actually, of the type of renewables that exist, geothermal leads, hydro would follow, certainly not comparable to solar or wind.
And it is said that our potential to produce geothermal
Yes.
is about 10,000 megawatts.
Correct.
How much are you planning to add to the grid in the next 5 years?
Okay, so currently the geothermal installed capacity is about 670 megawatts. Compared to a total of 2,350 total installed capacity. So you can see it's just about a quarter. But as I've already indicated, that quarter of installed capacity produces 47% of the electricity that is used in the nation. The potential is about 10,000 for the country. As KenGen, in the next 5 years, we have a pipeline of projects of 720. And out of that, geothermal is contributing 630. So you can see it's like we are going to more than double the capacity that we have today in the next 5 years. Yes.
And are you demotivated by the fact that, the uptake of generated power in this country has gotten to a point whereby it is becoming too slow and thus, acting as a demotivator to power generators?
Okay. Power generation is actually a long-term investment. It's not something that you invest and expect that in the next 2-3 years you're getting a return. It's long-term. Our PPAs, power purchase agreements, run for 25 years. So when we invest in power, we know that even though for the first 1 or 2 years the demand may not be that good, it's just a matter of time before the demand picks up. So we are not demotivated by that at all, because we know that as the economy picks up and continues to grow, even the capacity that now may seem like it's a bit of excess will actually not be there.
How much idle power do you have?
Okay, currently the total installed capacity is 2,350 megawatts. The recorded demand is 1,650. So you can say there's a difference of about slightly less than 700 megawatts. But remember, it is from that spare so-called capacity where you have to maintain the power plants that you have, because they are moving machines, and at one time you need to stop them, so you maintain them. Another time you may have an emergency shutdown on one of them because it's developed a fault. So that spare capacity or reserve capacity caters for that. So it's not really too much, considering that you need it for reasons such as what I've said, and also the fact that in the case of hydro, when you have a drought and the capacity reduces a bit, then you call on that capacity so that you can meet the demand. Yes.
And there was a time when GDC and KenGen, they were very aggressive in the exploration, but this has plateaued. What has happened?
Okay, maybe I need to correct you there. We are still very aggressive in terms of exploiting the geothermal. Just to give you an example, in the last 3 or so years, we have drilled over 110 geothermal wells as KenGen.
110.
110. That is giving us a capacity of close to 500 megawatts. And that is what is going to help us to develop the 630 megawatts that I said we are installing in the next 5 years. So we have not slowed down at all. It's just that maybe, people have not known about it, but we are definitely exploiting geothermal as much as we can. In fact, we have got rigs at Okaria. I'm aware that GDC are also doing the work that they're doing in Menengai. And just today when I was at the Ministry of Energy, I was talking to the managing director of GDC, and he said they're starting some work in Baringo for drilling more wells. So the work has not really slowed down, but it's continuing in earnest.
I mean, we can leave that question at that point in the interest of time. But I still want to find out. Sometimes back, KenGen had hinted at a possibility of exporting power.
Yes.
Are you still interested in doing so?
Yeah. So currently, the only off-taker of the power that we produce is Kenya Power Lighting Company. So our power purchase agreements are with Kenya Power Lighting Company, and I'm aware, for example, that Kenya Power Lighting Company has signed a power purchase agreement with Rwanda for 30 megawatts, of electricity. So clearly that is there. Now, what we are waiting for as KenGen is a point where perhaps when the law or the energy bill allows for us to be able to sell to other consumers, and the networks are also in place, because to export power you need the transmission lines. Currently we're only connected to Uganda with a very old line that KenGen, when it was called Kenya Power Company, constructed in the 50s. Yeah. But more transmission lines are being connected, and as we connect Uganda, Rwanda, Tanzania, Ethiopia, the possibility of exporting power, we are still considering it as KenGen. Yes.
And if, for example, the energy bill was to be passed or fast-tracked in Parliament,
yes,
and let's say that we have it by the second quarter of this year, are we ready to do so? And how much will it cost for KenGen to start there?
Yeah, so as I mentioned, it would be still difficult to export the power because you need the infrastructure, and that is a transmission line. So, for example, KETRACO now are in the process of negotiating Tanzania for an interconnector, a power interconnector to connect Kenya and Tanzania, because we are not connected to Tanzania. The Ethiopia line is yet to be completed. So you need that infrastructure
to be put in
for
place.
Trading across the nations to happen.
Good.
Yes.
Thank you very much, Engineer, for joining us here on the Trading Bell.
Okay, thank you very much.
Albert Mugo, Engineer, is the Managing Director and CEO of KenGen, joining us here to help us understand their business. You're watching the Trading Bell. We'll be back shortly. Depressing figures of Nairobi Securities Exchange, where all the four indices are down and continuing with a trend that has persisted for quite a long time. Joining us in studio, Samuel Gishohe is a business development manager at NIC Bank, or NIC Securities, joining us here. Thank you very much, Gishohe. Now, Bloomberg, according to Bloomberg, the NIC is the worst performing market so far. What does this tell us?
For me, a positive signal, because usually when the news is bad, in markets we say, buy the rumor, sell the news. And the news is telling us that the market is at a bottom or near bottom. So that means there's opportunity to buy into the market. So for me, I think this is a signal. Usually when that sort of information comes out, is the opposite. People tend to want to get interested in markets when they hear the good news, that this is the best performing market, returns are very high. But then that will normally be a signal that the market is overbought, meaning that prices stocks are overpriced, meaning you're getting into the market at a high, and yet the idea is to buy low, sell high. And one of the signals that we need to be looking at is when a market is going into a bear, then it means that the slide is actually significant on a day-to-day, month-on-month basis. But right now, we are at a trough, because all we are seeing is a 1% decline, 0.5% decline.
Yep.
So now you are starting to see like we are at the bottom of the wave, and so most chances are we are at the bottom, and the most likely way is up.
So from what you're saying is we have hit the rock bottom. The only other place we can go is high.
Well, it's not science, really. It's possible to go a little lower, but it's not moving as fast as when you're getting into a bear. So that means that you can feel we're almost at a bottom. You see, I think you've had that a drought is usually at its worst when it's about to be over. So
Absolutely. Now, tell me this. We are about to get into the into the mode of financial reporting by listed companies, and we know for sure that starting tomorrow we have EABL. As we enter into this period in February, are we expected to see the market somehow gaining some traction?
actually, that's a very good point. December, January, people are going on holiday. There's all those expenses that come with it. So there'll be sell-offs. So that will push the market even lower. Fund managers and most of those other big investment funds will be off market, meaning that volumes will be very low. And we're seeing volumes of 250 million, which for a market which sometimes does a billion or and above is very low. Now January, school fees coming back, on board. Fund managers are just coming back to the market, so still very quiet. Now February, we'll see the banks start to announce their figures. And we do expect that since the interest rate capping only happened towards the end of last year, they will still have some handsome profits to show. And so we will start now to get some excitement from that. And usually in February, March, we could see a bit of a rally coming in. Yes.
And of course, we know that we are yet to get the full details of the impact of the interest rate capping low. But which sectors of the market do you expect to perform better?
Well, I think in these times you'll notice that the more defensive companies, those which have strong market share, the likes of breweries, the likes of BAT, the likes of Bamburi Cement, the bigger banks, the KCBs and the equities will tend to be more stable in a period of difficulty. Especially when there's a slowdown on the corporate side of things. So we will see those ones tend to hold their ground, and they will usually be the first to start picking up before the ones that have lost most of the value start now, showing the growth. Yes. Now,
finally, if you were to advise somebody to go to a certain counter, which counters would you advise a discerning investor?
Well, I would look at the fundamentals, because there are those companies which are very speculative. They are in an industry which is also very, very volatile, and they don't have very strong fundamentals in terms of assets and their market share and their products. So I would look at those companies that they have a defensive plus a growth element. So some of the local banks which are going into these new electronic, banking business, like online banking and, things linking with M-Pesa and all that. That is actually quite nice. You're going to look at companies that have big market share, like breweries. Those are good because they will hold your value for now, as you expect to go into the next up or the next.
All right. Thank you very much, Samuel, for joining us here.
Thank you for having me.
Appreciate it. Well, Samuel Geshohe is the Business Development Manager at NIC Securities, joining us here to help us understand where the market is headed and, of course, how the market has behaved in the last 1 week. You're watching the Trading Bell. Stay right here.
What products are usually traded at the NSE?
The NSE is a market where products which are listed are traded. And tradable securities are those that have been issued to the public. These include shares, bonds. Bonds fall into two categories: corporate bonds, which are companies which have issued debt to the public, and also government bonds. And very soon we are going to have other products, including real estate investment trusts, which have already been issued, by the way. And we're also going to have derivatives, which are also a form of hedging tools, which are going to be traded on the market.
With the exchange history fact, it's a wrap for Trading Bell, coming to you from the trading floor of Nairobi Securities Exchange. Always remember you can get in touch with us. Our SMS line is 22162, and always remember to start with the word BIZ, that is B-I-Z. My Twitter handle is @O'BrienKimani, and our Twitter handle is @The Trading Bell. Always keep the conversation going. Hashtag @The Trading Bell. And always remember to let us know who you are and, of course, where you are. We come to the end of the program today. Thank you very much indeed for joining us. We'll see you again on Thursday, same time right here on KBC Channel 1. My name is O'Brien Kimani. Have yourself a profitable week ahead of you.